Recording in progress.
I'm audible?
Hello everyone, welcome to Tax-o-phile. This is Weber Bansal. Today I welcome CS Sahil Dhingra sir, which is a chartered accountant with over 2.5 years of post qualification experience in direct taxation. Furthermore, he holds a Bachelor of Commerce degree from Bikaner University of India. He has handled advisory matters on PE, capital gains, restructuring, litigations cases concerning bogus purchases, etc. Currently, he works for a Dubai based consulting firm specializing in corporate tax and assesses the impact of corporate taxes on UAE entities. He prepares client awareness and tax training presentations, assists clients during transition period, ensures seamless implementation of new tax laws, including corporate structuring and transfer pricing policies. Today, I welcome Sahil Dhingra sir for presenting the second session of the UAE corporate taxation on our channel. The topic for today's session will be the permanent establishments PE. Over to you, sir.
Thank you, Weber, for introducing me. Thanks for giving me opportunity to speak on the topic permanent establishment. So, Weber, can you give me a right to share the screen?
Taxation on our channel. The topic for
Weber, my screen is visible.
permanent establishments PE. Over to you.
Thanks, Weber, for introducing me. Thanks for giving me opportunity to speak on the topic permanent establishment. So, Weber, can you? Weber, my screen is visible. Weber, are you there? Weber, my screen is visible. Weber, my screen is visible.
Yes, sir, please go ahead. Your screen is visible.
Yeah, sure. My screen is visible to you. Okay. Hi to all. So our topic of discussion for today is permanent establishment. So that is very important topic from UAE perspective. So as you know that decree law is out on 9th of December. So in decree law article 14 specifically deals about the permanent establishment. So basically it's very important from UAE perspective because if we see the present scenario in UAE, so most of the foreign companies have presence in UAE either through a branch or either to a license office or representative office. So we will just touch upon the practical aspects also from PE perspective. So firstly, we will talk about what is PE. PE is nothing but like if you have a presence in UAE, either through a branch or office like that, or a license office or representative office, then you have to pay taxes for the at the goodwill part of the presence in UAE. So basically, there are four types of P. First is the fixed place P, which talks about the like if you have any branch or warehouse or factory or any mine oil well or like that, then you might be triggered under the fixed place P. But to check the fixed place P, you have to satisfy some test which is given under the OECD uh, 2017. First is the place of business test, and second is the location test. Third is disposal test. Fourth is permanence test. Fifth is business activity test. So you have to satisfy all the tests, then you can be covered under the fixed place B. And another is the construction fee. So if you have any project going on in UAE, if you have already entered a contract or construction contract, and you have any project or site in UAE, and it is more than 6 months, then also you can cover under the construction fee. And they also covered the concept of tax section 7, in which you try to anti avoid the taxes, like you segregate the contract between you and your related parties. But that will also covered under the Article 14 of the decree law. So now it's not possible that you can segregate your contracts with your related parties. That is also covered under the construction. Third is agency fee. Like if any foreign company appoint the agent in UAE, and agent is working as a dependent agent. So what is dependent agent? We have to see whether the it's working only for the one foreign company or any other foreign company. We have to see legally and economically independence, and then we can conclude whether the agent is dependent or independent. And if dependent agent conclude contract on behalf of the foreign company or negotiate contract on the behalf of the foreign company, then might be agency fee can be triggered. So for that we have to see the agreements and each and every documentation. Then we can conclude whether you are covered under the agency fee or not. We have to see the roles and function of the agent also. Fourth one is service fee. Basically, many in present scenario, many foreign companies deputing employees to UAE. So that can also be triggered as a service fee if you are deputing your employees. But in decree law, there are some conditions to trigger service fee. Like if you are deputing people from outside UAE to UAE, then if the you are earning as core income generating activities or you are earning state source income, then might be service fee can be triggered. But on the other hand, um, cabinet decision will be announced by the Ministry of Finance or the FTA, that which will tell about that in some exception cases, service fee will not be triggered if the deputation is for temporary purpose. So the cabinet decision will notify which type of activities will not be covered under the service fee. That we have to await till cabinet decision is not out. Now we will touch upon the practical aspects from UAE perspective. Like UAE announced the decree law on 9th of December, and in 31st January they come with the press release which talks about the corporate tax in UAE. So there are many contracts which have already going on before tax is announced. So that is the bigger issue here, because when contract is entered, that time there is no law. Later on, corporate tax is announced. So we have to see from when the corporate tax is applicable on them. Because as a non-resident, they are not following any financial year in UAE. So we have to see that aspect also, from when the corporate tax will be applicable on non-resident who have presence as a PE in UAE. So other topic of discussion is preparatory and auxiliary activities. So basically, preparatory auxiliary activities are the exclusions of P. So if you are doing all these activities, you cannot be covered as a P. So if you have any place of business, or you are doing storing, delivery, or display the goods, then you might be not be covered as a P. If you are uh, holding the goods for possessing by another person, like if you maintain stocks in your warehouse in your office to that the same goods will possessed by the another enterprise, that will also be not covered as a. Third one is if you are open any office or branch for purchasing goods or for collecting information, that will also be not be covered as a P. Fourth one is if you are doing any preparatory or auxiliary activities, that then also you will not be covered as a P. So what is a preparatory auxiliary? That we have to see based on the facts and circumstances whether it's preparatory or not. So fifth one is if you are conducting any combination of all the activities, then also you cannot be covered under as a P. If overall activity is of P and A nature. So these are the other key areas. If the P is triggered in UA, either as a fixed base P, service P, construction P, or agency P. So first is the force of attraction. Uh, Basically, force of attraction is the wider concept which will give the right to source country. Basically, specifically, if any foreign company have a if have PE in UAE, then might be UAE get the additional right to tax the additional income, but it's not present in the OECD model, but it's present in UN model only. So Weber will later on touch on this issue uh, in detail about force of attraction. So second topic is license office. Basically, in UAE specifically, there are many foreign companies who have operating as a license office. So there are some activities which can be done by the license office and some activities which are not allowed. So they can act as a communication channel, or they can act as a act on behalf of the foreign entity in UAE, but they cannot do more activities which is of not of P&A. Third one is the ambiguity in decree law and the international agreement. Suppose time limit for consumption P is 6 months in decree law, but on the other hand, in DTAA, the period is more than the decree law, then the decree law will prevail. As per Article 66, if you read, and along with the FAQ 13, so the DTAA will prevail if there is any ambiguity in the decree law and the international agreement or DTAA. So fourth one is a very important issue for double taxation. Suppose if a foreign company have a branch in UAE, so in most of the cases branch would be declared as a P. So if you paid as a PE, you have to pay your taxes in UAE on the attribution part. Suppose you pay the taxes and at actual level your books will also consolidate it. Then you have also pay the taxes in actual jurisdiction also. So there is a double taxation on same income. So the taxes you have paid in UAE, that you have to claim as a foreign tax credit in your uh, actual jurisdiction, because you have paid double taxes on same income. That you have to be aware while you are operating as a branch in UAE. So we can say that license office is a PE or not. It depends on the facts and circumstances of each case. Then we can conclude whether it's a PE or not, or whether it's a license office or not. So basically, there are some do and don't for license office. Like license office can operate as a communication channel. They can distribute brochures, literature for foreign entity. They can do the feasibility study for foreign entity in UAE. Whether if they want to set up a new entity in UAE, so they can firstly open their license office to do the feasibility study. That is allowed, and if they want to explore the opportunities in UAE, so that time also they can initially open as a license office to investigate the business opportunity in UAE. Now there are some don'ts also which should not be done by the license office or representative office. Otherwise, they will be covered under the purview of P, and they have to pay taxes on the attribution part. First of all, LO should not involve in the signing, negotiating, finalizing the contract. If they are doing the same, then there is a risk of fee. LO should not engage in the conducting commercial trading or industrial activity. Then might also they will be covered under the purview of fee. And the activities which is done by the HO, same activities a license office is doing, then also there is a risk of fee. So they should not involve with the core and substantial activities. So these are the risks from PE perspective. So basically, in UAE, you have to see the agreement between the parties. You have to see the actual conduct also. You cannot directly rely on the agreement. You have to see the actual conduct of the agent or the related parties to see whether there is PE or not. So, as a non-resident, you also have to take the registration in UAE as a non-resident person. So basically, few days back, a corporate tax registration manual is out, which talks about the registration process. So as a non-resident person, if you have a presence in UAE, either as a PE or not. Then also you have to take the registration with FTA. Either you have to appoint a tax agent in UAE, or you have to, as a non-resident, you have to take a registration with the FTA, and you have to pay later on taxes on the basis of financial year. Like in UAE, financial year depend on like which financial year you are following. Like after 1st June 23, like if you're following Jan to December, so your first financial year will be Jan 24 to December 24. Then accordingly you have to pay your taxes. But as a non-resident, if you are not maintaining your books of account in UAE, then there is a issue which financial year you are following. Then as per the FAQ, might be you have to follow the Georgian calendar, Jan to December. So that is a personal view, that is not a legal view. So we have, that can be depend on the FTA view also, or the Ministry of Finance view. So that all the points are covered from PE perspective, because it's very wider concept. So it's not possible to cover each and every aspect in the discussion. So we have tried to touch each and every concept. Now Weber will speak on the force of attraction, which will give you depth analysis. But what do you mean by the force of attraction? Weber, to you.
Yeah. Hi, sir. Thank you so much for enlightening us on the various issues of the permanent establishment, majorly the license office issues. Now we are coming on to the force of attraction rule. So, what does the force of attraction rule means? It's not a psychological term or a normal term which we use. The force of attraction. It is a international taxation terms. So, for that reason, let us take an example. If in the international tax there is a rule that the PE income, the income of a PE will be taxed on a residence based rule. So if there is a P, say suppose that I am having a P in another country, says suppose in the Switzerland. Okay, so my source based taxation rule may apply on the income of that P. The income that is attributable to that P that is situated in the Singapore will be taxable in the Singapore. This is a normal rule that we apply on the business profits under the article number 7 of the UN or the OECD model conventions. So, in order to give access right to the source country to tax the additional income which that PE is earning from their jurisdiction. Suppose I am earning something else which is not probably through the permanent establishment in the Singapore. So for that reason, I'll not authorize to tax that income. So, what does a force of attraction rule do? It gives you the access right. If there is a treaty between India and Singapore and it applies the force of attraction rule, therefore, I'll be giving a additional right to Singapore that you can tax the additional income from that P which is earned under your jurisdiction. So, suppose I am like sir has taken some preparatory and auxiliary activities example. So if I am earning something as a preparatory and auxiliary services, so it will also be taxed under the jurisdiction of the Switzerland, which was not earlier in the case. So if I am earning something or through the PE in the Singapore, that will be taxable under the old as well as the new law, irrespective of the force of attraction rule. But if I added a force of attraction paragraph into my treaty, that gives me the additional right to tax the income which is directly or indirectly, which is, excuse me, which is directly or indirectly coming into my way, of which is taxable. So if I'm earning something from the Switzerland, but that is not directly related to my PE, so that will also enlighten me. That will also, the force of attraction will give me an additional right to tax that income as well. So this is all about the force of attraction rule. So if I have to give an example of force of attraction rule, so can you please point out on the point number 4. So please see on the point number the paragraph 4. In some of the treaties, the FOA rule is mentioned indirectly. Paragraph 1 of Article 7 in such treaties goes like this. Article 7 is a business profits article. So let us read what the Article 7 says. The profit of an enterprise of a contracting state shall be taxable only in that state unless the enterprise carries on business in the other contracted state. Other contracted state in my example is Switzerland through a permanent establishment situated therein. If the enterprise carries on business as aforesaid, the profits of the enterprise may be taxed in the other state, that is Singapore, but only so much of them as it is directly or indirectly attributable to that permanent establishment. So the word directly or indirectly attributable is giving right to Singapore of the force of attraction rule. So it gives you the additional right to tax the income which is not directly related to your permanent establishment in Switzerland as well. So this is all about the force of attraction. So if you would like to add something to it, please.
Yeah, thank you, Weber, for detailed analysis of FOA, force of attraction. So I want to add on something from your perspective. If in Decree Law Article 14, so I can explain to an example like a company in Singapore have a presence in UAE to a branch. So the Singapore entity have a PE in UAE. Suppose all the contacts entered with the customers in UAE through the P, then that income will be attributable to P. Suppose on the other side, Singapore entity directly entered a contract with the customers of UAE without involving the P, then also that income will be covered under UAE decree law as a source income. But that is replica of force of attraction. In that also, UAE government will get the additional right to get the same income because that income they are arising not to P but directly entered they directly entered contracts with the customer and they are earning the revenue. So basically, it's also a example of force of attraction. In this, the directly entered contracts also taxable in UAE as a source income. If you read the Article 15 of the decree law, which talks about the UAE source income, which clearly explains if you are earning any revenue from UAE customers, then also they will be taxable as a source UAE source income. So in decree law, they have also mentioned that if you are not earning an income to P, then that income can also be taxable as UAE source income. So that is a force of attraction. But on the other hand, decree law cover the additional right for tax getting as a source income. But on the other hand, in most of the treaty of UAE with other countries doesn't cover force of attraction in Article 5 in Article 7, so which doesn't specifically talks about the force of attraction. Force of attraction is available in very few DTAAs. So that we have to see if the decree law is giving the right for taxation as a US house income. But on the other hand, DTAA of UAE with other countries don't have the force of attraction. Then how country will get the right? Because otherwise, ultimately, you will be out because might be there chances because there is a no P, no tax. If you are covered as a house income, on the other hand, there is a no P, then you might be out from DTAA. No P, no income will be taxable. That we have to see in the future how they will be taxed that income, which will be taxable under the DK law as a source income. That is from my view, from my side related to the force of protection.
Thank you so much. Just wait for a second. Thank you so much for enlightening us on from the UAE perspective on the force of attraction rule of the international taxation. So this is it for our session of today. If you have any questions watching on the YouTube live or on the Zoom meetings, can please shoot us the questions. We will have more than happy to answer all those queries. Please share your over the YouTube chat or YouTube live chat or the Zoom comment section, please.
Sure, if anybody have any questions related to that corporate taxation in UAE, so they can either comment in the YouTube or they can reach out to mail ID. They can put their questions on the mail ID also.
So
So we
I
will
suggest you to please show the last screen so that the people can also show, just get the idea of your email ID or the contact details.
yeah, that is our contact details. If you have any questions or if you have any doubts related, then you can reach out to us. So we will assist you in resolving your doubts
Yeah, we
related
also
to corporate taxation.
if you want to resolve your doubts, I suggest that either you mail to sir, that is on his personal email ID. He'll be more than happy to solve your queries. Or if you want, so you can shoot your queries over the YouTube comment section. The sir will be definitely active on that portion to solve your queries at the earliest. So if you have any queries relating to anything over the UAE corporate taxations, so please do comment or do share your chats or the questions over the live chat, please, so we can get over the idea what kind of questions that or what kind of issues the people are getting, so that we can plan the next sessions accordingly, or that will be helpful for us.
So in the coming month or coming week, we will also introduce our more sessions related to more topics on the UAE corporate tax. So stay tuned for more updates or more sessions on corporate tax. Keep in touch. Stay tuned for more sessions.
Stay tuned for us as well as for the Tax-o-phile YouTube channel. We'll share the more updated videos over the YouTube corporate taxations as well as we progress over the uh, law, which is substantially generating or evolving over the time. So we'll give you the updated topics as well at the recent times or at the latest as we can, or for the other tax related videos like over the income tax from the Indian perspective and not of its news. So you can also subscribe our Tax-o-phile YouTube channel, so you will get the latest updates over the Indian tax laws at the earliest. So that it will help you to keep updated by yourself and to save your tax a little bit. So I think it's no, there is no questions that that we can share with you, sir. So I hope we can conclude the session today itself at this point of time. So if there is anyone who watches our video afterwards, so please do not fear to comment us on our YouTube video, so that we'll definitely share your query with sir, or sir will definitely reply at the earliest. So this is it for the session. If you want, sir, if you want to share some last words with the audience, please you can.
Thanks to all for joining our session specifically on P. So it's a very interesting topic from your perspective because it's cover many areas. It's overview from the overview of the P. So it's a very detailed topic. So it's not possible for us to cover each and every aspect in the session. So we are trying to cover each and everything from P perspective, which clients are facing in UAE. So that's from my side. Thanks to all for joining us.
Thank you all. Stay tuned with our channel for more such latest views. Thank you so much, sir, for joining in.
Okay, thank you, Vaibhav.
Thank you, sir.
Recording stopped.